The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the April 8th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, the words of wisdom brought to us by our extraordinary producer, Al. You know, he makes everything seem so seamless for each of us contributors here, and I can assure you it is not. But Al starts his day off. This is his incantation, and it's a beauty. He says, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become your habits. And watch your habits, for they become your character. And finally, watch your character, for it becomes your destiny. Let's go check out the destiny in the markets out here right now. Dow is trading off 14 points, trading out at 16,231. S&P is flat, trading up 69 cents at 1845.77. Composite up 13 bucks at 4,093. Russell 2000 up 2 points at 1137. Leading the charge here to the upside this morning, we've got Priceline up $14. Google's up 12. Chipotle getting in on the fray here, up $7, up 1% this morning. Amazon up $7.52. Trading out at $3.25. Netflix up $6.50. Baidu up $5.97. You've got VIP Shop Holdings up 5% this morning, up $6. Gigamon Inc. leading the charge to the downside, off 31%. Big volume behind the move out here, off $8 and change. Activist, ACT is the ticker symbol. They're down about 3%, off $5.50. Biogen, BIIB, off $5 this morning. Regeneron Pharmaceuticals off $4. Cornerstone, I can't pronounce that last name, Ondema, maybe, I don't know. CSOD, it's off 7%. Spectranetics off 11%. Domtar off 3%. Humana, HUM, down 2%. Toyota off a couple of points. Their call number is 877-927-6648. Let's go check out the actual indexes, see what we've got going on, where things might be headed to. So let's go over. Let's start off by taking a look at the, what do we want to look at here? Let's take a look at the New York Stock Exchange, since that's the first up on my list. What is it doing? Well, interestingly enough, the New York Stock Exchange here broke out of the October 2007 highs. The number is 10,387.17. Yesterday, the pullback got down to a low of 10,391.68. So it's interesting at this stage here, that has not been able to break down into the lower part of the range. Now, the bears have control. The price oscillator is below the zero line. The summation index has turned down out here. We've seen a couple of large reversal days out here. What is a likely outcome on a continued pullback here inside the New York Stock Exchange? Well, pretty easy. We would just simply come from our swing point low. That happens to be February 3rd. We come all the way up to the high that was put in here on Friday. And you'll say, number one, the damage inside the New York Stock Exchange really not too bad right now, right? It has not even made the 0.382 retracement, which is 10,311.51. So the wider swath of the market doesn't look too shabby as we speak right now. Now, here is a key level. This really applies to all of the index that we're going to take a look at. It's in that March the 14th, the March the 3rd-ish level out here. The reason is if I draw a line across the bottom of that March 3rd area, that's really where we've got some swing points, where we've got price being tested there. You get below that floor, there's really nothing to stop the descent down to inside the New York Stock Exchange down to 10,900. If it can make it down there, it ought to make it all the way back down to about the 99.32-ish range. So that's on the NYSE. But thus far, damage has been contained pretty well. It's not oversold. We take a look at the relative strength indicator out here. So it's really just mid-stroke. So it's got plenty of room on the daily chart to do whatever it wants to do, certainly to move lower. But so far, damage has been pretty well contained in the NYSE. If we go take a look at the, we don't take a look at this too often. Let's look at the Wilshire 5,000, right? You talk about the New York Stock Exchange making up, 3,000+ stocks out here. You got the Wilshire 5,000 obviously making up more. Now, the Wilshire 5,000 as an indicator, if we take a look at what it is doing, it's showing a bit of weakness out here because it closed yesterday below that March 3rd level, which was 19,676. You're trading right now 19,650. Where can this travel down to? Well, really, now that it's below this area, there's nothing to stop it. There's just no swing points. There's nothing to really stop it from getting all the way back down to the February 5th area. Of course, from just a natural Fibonacci standpoint, the area where it would likely pull back to. So it's sitting right now on the 0.382 retracement area. If it gets below 19,615, 19,614, says 19,217 would likely be its next stop. That is the 0.618 retracement. That's on the Wilshire. Let's take a look at the IBB. Let's take a look at the biotech sector here with inside of the NASDAQ. It's trading right now at 224. Where is this likely headed to? Great question. It is trading right now into this little gap, the little sign of strength out here that was formed. Let's blow this up on the chart. Is there a little gap? Let me make sure. Maybe there's not even a gap out here. 231.83, 231. No, there's no gap out there. What was I seeing? I was seeing things. Oh, here's the gap. There it is. So there's a gap out here. That is on December the 20th. The high out here of 224.07. Low of the next candle, 224.80. So let me draw a little line across there. That's what it is trading into. It has found a little bit of support here, some temporary support. We'll see if now this will be the third day that it would be tested. Now, not a sign of strength from compared to how this thing has blown apart and pulled down. That's for sure. But as a logical area where it has been able to form an area of support in the past out here. We take a look at really swing points. There's a number of swing points out here. What do you use on this? And almost just let's take a look at a trend. Let's take a look at a trend line here. And the one that just jumps out at me is coming back to the November 9, 2012 level. And it's really more of a channel that I'm trying to draw out here. That's as opposed to a trend line. So that is the area where it ought to find some type of support out here. And if it breaks below that, then you've got some real trouble out here. And what you'd have to do is really take a look at a multitude of swing points out here. If you come from the low on October 9th, that we know that's a pretty significant swing point just inside our markets out here. You can see it's also right now at about the 0.618 retracement off of that area. So there's a pretty decent level of support that it looks like the IBB is trying to trade down into. And as long as it holds that area, then you're looking at a potential bounce. But the bounce here could be relatively timid just simply because of the volume and the selling on the way down out here. So that's on the IBB. Let's go take a look at the Russell 2000. Russell 2000 right now up $1.60. Nothing really big. Now the Russell 2000 also trading down into its support line of a channel line, of a trend line out here. Well, I got it drawn here as a channel line. I don't have the top of the channel because we're most interested right now in the bottom of the channel, and that's the one that is coming off of the December 31st, 2012 time frame out here. So price has found a little bit of stability at this moment. To break below that, where does that send prices off to inside the Russell 2000? Well, if we go also from the swing point low from February 5th up to the high. Now, the Russell made a high on March the 4th. That was a big wide price spread, accelerated volume. I don't recall that any of us ever found out what was really behind that move out there because it really had formed it had taken out a B point of an A to B equals C to the upside. Nonetheless, prices pulled back into a channel line. If it breaks, and as well as the 0.68 retracement level off of its last set of swing points that happened to be 1132.42. We saw price yesterday get down to 1130.04. before a little bit of a bounce interest session out here. But the Russell 2000 is certainly struggling. If it cannot hold this area, breaking that trend, look, not only should it get to the 1110 mark, which is your .786, I'd have to say that breaking that channel line is muy importante. And that means that it ought to move down at least and test the February 5th area before it releases any type of information. That's between 1082 and 1098. Let's go take a look at the SOX index out here. SOX index, one of the stronger of the indexes, nowhere near its channel lines out here. And if we take a look at retracements, had a big wide-ranging bar, no question, off of the highs out here. But it has not even been able to make it down to the dead cat bounce of .382 retracement level, which is 567.52 out here. Today, trying to stage a bullish reversal, a little bull sash candle. We'll see what it can do. But the pullback here inside the SOX index at this stage, really not too shabby out here. Maybe we're going to see the market try to form the C point of a potential A to B, larger A to B equals CD to the downside. Let's take a look at the Dow. We'll also see that the Dow here, after getting above its all-time highs from December the 31st, that certainly is a significant resistance line. Out here, you had that big bearish reversal, that evening star formation pattern that was after the doji that had formed on April the 3rd. If we take a look at retracements, we'll see that the Dow from the lows of February 5th to the high put in on Friday, also not too bad. Has not made its .382 retracement level. That number is 16,138.49. The real support inside of the Dow takes you down to probably the 16,006. 10,000, that would have been a Freudian slip, huh? So about 16,006. You get below that, 15,833 is the number, most likely 15,616. That's what's going on inside of the Dow. Let's take a look at the NDX 100. NDX 100 here showing substantial weakness, it having broken its a little trend line. That's a short-term trend line coming off of the June 24th, 2013 level. What does that actually set up? It's having a sideways day here today from a retracement standpoint off of the February 5th level to the highs put in here on March the 6th. You can see it's already made the .786 retracement. Really signals that it wants to go try to take on the February 5th lows, potentially bust it out. And if it's going to bust it out, those lows, by the way, are 34.18. That'll turn into a butterfly expansion pattern out here. That butterfly expansion could take it to a price level here of 33.31 to 32.21 out there. We'll take things one day at a time, one moment at a time. Let's take a look at the S&P 500. S&P 500 right now trading out at 1843.90. Just a little sideways trading action as we speak at the moment, so a flat session is down $1. Again, it has, its support level really, the March 3rd area, 1834. I'd have to say the real key level is going to be 1824.58. You get below 1824.58, what that sets up here, if we take a look at retracements from February 5th to the high on Friday out here, that sets up your 1798, 1772-ish range. You can see so far, damage has been pretty well contained inside the S&P. The real damage, as you know, inside the NASDAQ, inside of the composite, and right now the Dow is off 25, S&P down 1. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 47 points right now. What I want to do here at the moment, I mentioned this during the first hour of the show, is utilize all the wonderful tools that we have available to us to be able to go ahead and take a look at a trade. I get plenty of emails from folks asking me, hey, how do you go ahead and set up a trade utilizing some of the terminology? You know, I talk about average true range and not placing your stops too tight. At least that's my belief system out here. And the reason is that if you're going to be right on a trade, what I don't like, what I dislike is believing that I know where price is going to go intra-session. And therefore, what I do know is what the average daily movement is inside something that I would trade. And that says, hey, I'm going to place the trade. I'm going to give it enough free room to go to the upside or the downside. In fact, I use an expansion of that number. So we're going to take a look at what I think is setting up to be a potential trade out here, and that is in light sweet crude. Now, what I happen to have on my screen now. Why do I think the light sweet crude is a potential trade? Well, it's not just really me. The message of the commercial traders. So each Friday at 3:30 p.m. Eastern Standard Time, the CFTC releases the Commitment of Traders info. It's referred to, if you Google CFTC space COT, you can download all the information. Now, look, you got to be really good with the spreadsheet in order to be able to take a look at that data. What I do is I take a look at, now I didn't update it for last week or what have you. What you're looking at on the bottom of my screen here, you're looking at the net short position of the commercial traders and where they are at, even through the Ukrainian stuff. I must have had some bad data because I thought shortly after the Ukraine that they had really lightened their load on the net short positions. When I found out by going back and taking a look at the data afterwards, is either their numbers were wrong or I did something wrong out here. I'm going to go with the fact that perhaps I did something wrong. It doesn't really matter. The message is, hey, what is it telling us right now? Well, what it's been telling us right now and what's consistent, commercial traders are considered to be the big money in the marketplace. And the big money is usually the right money. Now, the big money is like a big ship. It is not a Hobie Cat out there. It's not a 16-foot Hobie Cat or what have you. It's a big cruise ship, and that means it takes a little while to build a position. It means it means they can also afford to hold their position, be wrong for a longer period of time than what you and I would typically. Certainly going to be outside of the average true range. So that means we've got to pick our battles and places as to when to go ahead and pick the fight out here. Now, this is a continuous contract that we have on my screen out here. So a continuous contract. Now switch back over into the May contract here in a moment. But one thing on the continuous contract is, and that we're watching, at least that I'm watching here, because it's the large, by the way, they're at the largest net short position that they have been in, like forever, pretty close to forever. And that being the case out here, it says that we should be seeing lower prices of light sweet. Either the big mothership is wrong, or the data is absolutely wrong out there, or, I don't know, something else I can't figure out. But let's go with what it is that we do know out here. So we know that the big money is saying that light sweet, actually the way that the big money is trading here says that this trend line, this channel line that I'm looking at on the bottom of my screen, that it's going to be broken. Now, it's been acting as a great level of support ever since 2009. So it's a pretty significant channel line out there. And if it does get broken, then we'll come back and we'll take a look at where price might likely go to. Although it's on the continuous contract, you've got this little potential Gartley sell pattern that is out here. I really just wanted to focus in on just really two things on this chart here. And that is what the big money is doing. So this is not a Steve-oism here. And the channel line that's out there. Now, what we're going to do is we're going to switch over. I'm going to switch over to the e-signal chart. We're going to take a look at the May contract, and we're going to put up the daily chart. We're going to see where the TAS signal box is set up. So this is the daily chart. Now, what's cool about this pattern here, as we speak right now, if we take a look at the what's referred to as the resistance level, the unfair high area, that's going to come in at a price of 101.85. This is on the daily chart out here. Right now, you're traveling at 101.97. So far, the intra-session high has been 101.49. Pretty good, 101.49 to 101.85 type range out here. Now, the cool thing is that as long as price closes below 105, so our back is really up against the wall, or price is back up against the wall, right around this area here, as long as price closes below 101.85, and we were going to go ahead and short light sweet crude, you would have to be presumed to be right on the trade out here. So, if you want to wait for price to get up to 101.85 and go ahead and pull the trigger, that would be ideal as well. Now, we know that with regard to our target, it's probably the 93, 98 range. So I'm really trying to set this up and walk you through everything. The first hour, I talked about the importance of being able to put everything down on paper. So when we get back from this breakout here, we're going to start putting things down on paper, and we'll take a look at using the SCO, I think it's the 200% or 300% ETF for light sweet crude short as one way to play it. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 33 points. S&P down 3.5. Composite is flat out here. Russell 2000 off 2 points. And so let's go back to our potential short trade here. Take a look at light sweet crude. So the vehicle that we're going to use, at least in setting up this potential trade out here, is the ETF SCO. It's the ProShares Ultra Short vehicle for light sweet crude. So I'm going to flip back and forth. Now, when you are trading a commodity like this and you're using the ETF, you really have to be paying attention to what's going on the commodity chart out here. All that we can really do with regard to setting this trade up here All that we can really do with regard to the ETF is, use it as kind of a guideline, but you really want to be paying attention to the future contract. Now, if we take the daily chart out here for the SEO, and I've got the same signal box areas up on my screen out here, it says that light sweet crude should have some pretty good support at 27.52. So 27.52 on the daily chart is one possible entry point. The problem is that may not really correlate to the light sweet crude hitting that unfair high that we're really looking at. That's why you would have to really use the contract to make your decision if you were really waiting to time that if you were sitting in front of a computer screen. However, let's take a look at the 120-minute time frame out here. A little bit more current data with regard to the last couple of days' activity. This says that at 28.55, this ought to act as a pretty good support level. So I'm going to say our entry point, we're going to wait for light sweet crude to trade a bit higher, the SEO to pull back a little bit more. We're going to say 28.55 is going to be our entry point. Now I'm going to switch over to a different chart out here. We're going to take a look at what is our price projection area. So here is the actual SEO ETF. Now, on any trade, what you want to take a look at always is the most recent swing point. Now I'm using this swing point back here from March the 17th. And the high out there is 31.27. So 31.27, you wouldn't use 31.27, use somewhere below that. So let's use 31.20 as the area. So 31.20 is going to be our first target. Now I say our first target because perhaps what's really setting up here, if we're thinking that light sweet crude could at least pull back to the bottom of the channel line, maybe even break it, if we take a look at what happens if price is moving in on the SEO, moving into that B point with volume, meaning with more than 1.6 million shares out there, that says it ought to at least do a 1-to-1 A to B equals CD. So our potential second exit for us to be paying attention to would be 32.31. Now we've got the opportunity right now to actually put together the trade and make our value decision. That's where the position size calculator comes into play. So all my clients, all my subscribers, they've got access to this. Look, you can do it manually if you'd like. And the way this position size calculator works, we type in the actual symbol. So it's going to be SEO. We're going to do a quick search on it. It's going to go ahead and pull up what it is. Now, I identify as a stock, as a sub-index. In this case here, really it's an index because it's a commodity. We're going to go ahead and go long, even though this is a short ETF. You put in your trading capital. I'm going to assume I have $100,000 in trading capital out here. Now, we're only going to risk 1%. That automatically gets filled in here. Now, what's really important is that the SCO, that ETF, on average moves 69 cents a day. If you got into this equity, into this position, and you put your stop too tight, somewhere in between less than 69 cents, you can be right on the trade and just wrong, have totally blown it on the stop. So I say pay attention to what the average true range is out there. That's what you want to be able to use as your guideline. So we said we would go ahead and take a look at an entry in this at 28.55. That would be the spot. We said that we had really two outcomes. I'm going to go ahead and use our second outcome here. 31.20 is where we, in essence, or 31.27 is where we've got to make a decision. But 32.31, that would be the A to B equals CD. That's really what we'd be gunning for out here at a minimum in the trade. Now, what this would do here, what this does up at the top of the form here, it gives us everything. It tells us where our stop ought to be. Now, by the way, that 69-cent average true range, what I did was I used a Fibonacci expansion. I used a 1.618 expansion of that. So I'm not even using 69 cents. I'm using $1.12 as our stop out here. The only thing that a larger stop does when you only risk 1% of your working capital is it reduces the number of shares that you have in the trade. Because you see, I'm taking $100,000. I'm only risking 1%. That's $1,000 of my capital. I'm taking that $1,000 and I'm dividing it by the stop that I'm using. In this case here, $1.12. Says I can buy 896 shares. Look, I always round things up. This is really used as a guideline. It's going to use up 26% of my working capital out here. If this trade works, it will produce a 3.3 to 1 reward to risk ratio. If I just use the original target here of 31.20, what does that take a look at? What does that look like out here? That still says that the reward to risk is 2.6 to 1. So it is a good enough reward to risk, in my opinion, to go ahead and take that type of a trade out there. That's if you believed in light sweet crude moving to the downside out here, and you would buy about 900 shares out here, and all you would be risking would be 1% of your working capital. That is how we use different set of tools to put the entire trade together. Let's go out to Costa Rica, to our man K. Rico. How you doing, K. Rico?
Good morning, Steve. I'm doing good. How are you feeling?
I am doing just excellent. Thanks so much for asking. How's the weather pattern in Costa Rica today?
We had our first rainstorm in San Jose yesterday since late November. And
wow.
We need rain so bad. Nobody really, it's fun. I watch on TV whenever I can and read the news all the time whenever I can.
Yeah.
And we have a water shortage here. 3/4 of the day we only have drops coming off of the faucets.
Wow.
Because we're short that much water from the lack of rain.
Wow.
And,
wow.
And I have to keep buckets and plastic tubs of water in supply in my room to flush the toilet, to wash my hands. I have to take a shower downstairs with little water coming out of that shower sprout with a washcloth. It's getting old, Steve, but I can't complain. That's the life I chose.
No. So what's one of the big crops that would come from the general area where you're living? Are there any large agricultural crops that this drought is impacting?
Bananas, papaya.
Now, do bananas and papaya, do they require a lot of water? Do you know?
Yeah, everything requires basically water, but they're so durable because they're grown up in the mountain region areas where the clouds are touching the mountain tops.
Okay.
And they're getting their moisture, so they're okay.
Yeah.
It's just because of I'm going to say it straight out, the incompetence of the water department and the planning. They didn't organize the proper water management, so now they have to short everybody water to control any kind of water at all.
Well, cool.
They don't have enough storage areas.
Well, there's plenty of rain, as you know. There's plenty of rain in Florida. So when you do get back here, you'll just have to then you'll kiss the ground. It'll be good to be back in the U.S. of A. You wanted to look at.
I'm telling you.
Go ahead.
Yeah, I will kiss the ground, and my biggest dream is to just float around in my little swimming pool. And
there you go. There you go. You wanted to look at the IBB, the biotech sector inside the NASDAQ, which has been crushed here. Tell us what you're looking at, how I can help you.
Well, I would like to try to find an entry point and try to pick up 6 or 7 or 8 points, but doesn't seem like much bouncing going on. Today we hit a new low about 10 minutes ago since yesterday. Yesterday's low bounced around 222 we went from 231.5 yesterday down to 222, and right now we're at 223.5 approximately.
Yes.
But anyway, I'm looking for an entry point, not to short it, but to go long. And
right. So so inside the biotech sector out here, I would say what you're looking for here. And you're just looking for a few points. And what I put up on my screen here is I put up the 120-minute chart for the IBB. And the last time that there was a trade that could have given you the 8 type of points that you were looking at here was when it formed this price relative strength divergent pattern, when it made a lower low, but it was doing it on less weakness out here. And that had formed, the last one formed at about 4 o'clock in the afternoon. This takes us back to March 28th. And the low out there, right around the 228 range. And the bounce took price all the way up to about 245. So you wouldn't have certainly bought right at the bottom as that pattern was forming. You were looking for reversal signals, or when I use the Rhodes Momentum Indicator strategy, at least so this would have given you that type of a potential bounce. And that is on this 120-minute chart here. We've only seen one of those divergent patterns show up here since it made the highs. Now, the good news is, because you pointed out, it's made a little bit of a lower low, and it did that here. The low that first came in was at 8 o'clock in the morning yesterday, and that was at the price level here of about, 221.81. And so it did push just a tad lower, got to 221.18 here this morning. And, it needs to really push a little bit lower because I like when I take a look at price divergence, I'm looking at about 0.25% minimum between the low of where my starting point is and then when I start paying attention to a divergent pattern out here. So that's what I would be looking at, and then I would probably wait for price to close above the 8 or 13 period exponential moving average out there as a possible reversal. I'd like to see a bullish reversal candle. Now, on the daily chart out here, because I drew the IBB in at some point in time, I drew in a channel line, or maybe it looks like a channel line, coming back to the November 9, 2012 time frame. And it just happens that price here intra-session came down and tagged that area. So from a daily standpoint, it's actually, let me put up on a daily chart out here for us, Rico. So this on a daily chart also, let me come back. So on a daily chart, this is maybe also forming a price relative strength divergent pattern also. So that's really what you would like to see. Give me a moment to pull that up on the screen. Let me pull this over here. This happens to be the weekly chart, but let's put in the daily chart out here and see if we actually have that forming on the daily basis out here, because I was just looking at the 120-minute chart out here. Yeah, so the daily basis is actually forming that same pattern, even stronger, even better yet. So what you really need to see is, maybe it's not today, Rico, maybe it's tomorrow. At this stage here, you would say that a close above, let's say that the trading session were to end right now, then I would say a close above 228.38 or a move above 228.38, it's trading at 223 right now, would probably give you a move up to about 236. There's your 8 points. And at 236, it probably runs dead smack into resistance or somewhere right around there. So the 120-minute time frame is giving us an indication that it's losing the steam to the downside out here, and that's if you wanted to take that little risky bounce trade inside, something that's been taken apart. The other thing that I think you have to do is, I don't know what the top 10 weightings inside that are, but I'd go over and take a look at that too to see if you have, similar type patterns. Do you know which ones, or maybe a couple of them, that make up the top weighting inside the IBB?
I was actually thinking about that to make sure I got my ducks in a row.
Yeah, so I don't know. I don't know if there's 60 or 70 equities or 100. I do have something that has all of the individual equities, but my system would get really bogged down if I were to throw that up on my screen out there. But I would just do that. That's how I would take a look at it, and that's what the trades that are setting up. But if you just because it's moving lower with less relative strength, until you get the bulls to come in, until you get the reversal signal out there, to me this pattern means something to pay attention to, but not something that you would just go ahead and trade unless you were trying to catch that falling knife out there. So that's my thought. It may be better if you think the IBB is going to bounce. I would throw out another potential thing, and that would be go find out what's been the strongest that has held up the best on the pullback out here, and maybe look to spread the trade out between those two. See if it's the strongest that gives you the larger bounce of points or percentage versus the weakest out there. So just a thought.
Yeah. Okay. Yeah. I've been actually, for some reason, I did a Fibonacci chart line setup, and I came around 217 to 218 and a half for an entry point, but
okay.
There's
a number of swing points on the IBB to use from a Fibonacci standpoint. My eyes gravitated to the October 9th level, and my recollection is October 9th is a pretty significant, if I just put up the S&P 500, I should put up the NASDAQ really, but I'll just put up the S&P 500 right now. That October 9th was a pretty important low out here. So we know that the February time frame was, October 9th was a really important low. So I think using for your Fibonacci numbers, I would use the October 9th and I would use the February 5th to kind of gauge where things are at. So if we go use February 5th, we're going to see an expansion of swing points. And so at 221, so this is actually kind of cool. So I'm glad that you brought this up, okay, Rico? 221.38 is your 1.272 expansion. So what it's hit this morning, the IBB, it's hit a 1.272 expansion of a significant set of swing points, the 0.618 of another set of swing points, with regard to contraction, and it's hit the channel line. So it should be finding good support right here, right now.
Right now.
Alrighty, my friend. Hey, stay safe out there, and we'll send out some white light for some water for you.
Yeah, thanks.
Alrighty, have a great day. That was K. Rico in Costa Rica. Send them some white light. Send them some weather clouds out there. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow right now is up 3. The S&P is up 1. NASDAQ Composite up 17. Russell 2000 up 2. So we've got this little counter-trend rally that is underway, trying to rear its head. I think it's going to come from the NASDAQ that we get a signal with regard to what the market wants to do. So let's cover that. You know, if you caught that, can't recall, it was certainly the first hour. We were taking a look at how the market was pushing lower, doing it with less relative weakness out there. We saw some synergy amongst the ES Mini, the Nasdaq futures, and the Dow out there. So we had 3 of the 4 showing what are nice little reversal patterns, counter-trend rally patterns that are out here. So in the NASDAQ, how are we going to know? Well, if we take a look at the daily chart, if we see the NASDAQ move above the 35.27 area, 35.27 would say, okay, they're moving up. Then likely what we're going to see is we would see a bounce that would take you all the way up to about 35.96. That would be the range. Real resistance is 36.64 out there. So that's on the that would give us our signal here. That would be on the daily chart. If I put that together with what's going on the intraday chart out here, the intraday chart 120-minute says getting above 35.23 as the I'm sorry, about 35.33 would be the number out there. And then if I switch over to what's going on inside of the Rhodes Momentum Indicator signals, the one that really gave us that price relative strength divergent pattern out here, that, too, is giving us a signal of a ensuing, at least, rally attempt out here. Now, in this case, the rally attempt with regard to where the selling would be, we just have to take like a reasonable retracement levels. Retracement levels on the 120-minute chart for the NASDAQ. Let's go see what those retracement levels look like. Now, the Euro-Japanese yen has not participated thus far in this rally out here, but it is also moving lower with less relative weakness out here. Back on the NQ, what it's also done, it's made the 1-to-1 A to B equals CD to the downside, so it completed that pattern. That says the retracement areas, the dead cat bounce is 35.48, 35.94 becomes your 0.618 retracement level. I suspect that's what it would be that we would be looking at, right around the 35.94-ish range. So that's what's happening there. What do we have? We still have the VIX index. If we take a look at liquidity or lack thereof, liquidity right now, it is trading above the 50-day exponential moving average. That is at 14.65. It's trading at 15.32. Look, it gets back below 14.65. That tells us some liquidity inside the marketplace, and you could expect to see an even larger bounce that could take place inside of the NQ out here. So the NQ has been the weak link out here. Now it's trying to get some type of little counter-trend rally, a relief rally, get rid of that oversold condition. What is not participating here as we speak right now happens to be the euro-yen. The ideal trade might be, and who knows, this might be how it plays out, because we showed a 3 drive to a bottom pattern on the daily chart here for the NASDAQ. That would actually take price down to about 34.53. The symmetry here says that pattern would actually complete tomorrow. So if we do see another sell-off and it pushes lower with less weakness in the marketplace, utilizing the 14-period relative strength indicator out here, you do have a nice 3 drive to a bottom pattern that would form at about the 34.50 range. What you would like to see, then that would also mean that the push lower inside the currency that we're seeing on the 120-minute chart is saying, hey, not so fast, not just yet, but that whole story could change if the support level at 140.41 were to hold. So that's the analysis of the market as we speak at 10:58 on Terrific Tuesday, sometimes known as Turnaround Tuesday. Folks, stay tuned. Our man Basil Chapman is up next. Then we've got the Options Hour. After that, we've got Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. Thanks so much for joining me. Have a great Tuesday, folks. I look forward to seeing you tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.